Hello, this is Nigel Croft and this is TA for Traders on Tuesday the 21st of March. In this short video we'll be concentrating on the S&P-500 Index because today there seems to have been a key break downwards and we'll analyse whether this is significant or not. Thank you. So as you can see on the S&P, we've had a breakdown today and it has taken it down below the Bollinger Band, which is quite significant, and also it's taken it below the low that we had last week. If I just concentrate on the last few weeks, you can see that the low last week was about 23.58.5. and we're down at 48.5 now, having broken down. You can also see that the RSI has gone below 50 today, indicative of an increase in downside momentum. And as we mentioned last week, the MACD had tracked down, so they were shouting a warning signal anyway. On the longer term picture, you can see that the actual break today isn't that significant on the weekly. The RSI as well is still quite high, 65.72, and the MACD are still positive. So there's no concerns there. And if anything, we could just drift sideways for a few weeks, find support at the 20 and the 50 day. Going back to the daily, you can see now that the 20-day moving average, which is this yellow line, is starting to roll over. It's presently at 23.72, and that will be the first resistance on any upside. Likewise, if there is further downside, you will see support at the 50-day moving average, which is 23.31. What do we expect from here? Well, if you actually look at the 4-hour chart, which is this chart here, you can see that on the pullback, we came back to the 200 4-hour moving average, and we are presently bang on that, finding support at that level at 23.50. There'll also be a bit of the big number factor at 23.50. Actually, the index at the moment 47.2. But that's a factor, and it is moving upwards, that 200 average of the 4-hourly. So that's giving support. If we can hold that support, you'd expect a short-term bounce. And here on the 4-hourly, you can see there's a band of resistance centered around about 23.70, and that would be the initial resistance level where you'd expect the short-term bounce to go. And also on this 4-hourly, you can see that the RSI has gone very oversold, 24.43, and the MACD are overextended as well. So this is starting to indicate that we're about to see a short-term bounce. Back to the daily, and I'll go to the full picture. So if we do get the short-term bounce, this will only allow the 20-day moving average to roll over. So in the medium term, the picture is looking slightly negative with the breakdown today and the negative momentum that's now shown at the RSI and the MACD. So it is all a concern, and today has been a significant day. Looking at the support resistance levels, as we've mentioned, the 20-day moving average is rolling over, 23.72.26. That's the key resistance area. And the support on the dailies at the 50-day moving average, 23.31. But as we have already said, the 4-hour 200 moving average is at the 23.50 level, 23.47, and should be holding for the short term. So that's been this short edition of TA for Traders on Tuesday the 21st of March. I hope you enjoyed it, and thanks for watching. Please do look at the disclaimer that's coming on the screen shortly.